definitely time for us to put those things in perspective, that the value that we bring to the marketplace, that we need to be able to capitalize off of that and be able to be in control of our financial future. So I would like to say thank you, Maria, for that introduction. And my grandbaby, she definitely does take up a lot of my time. But so jumping right into it, I'm going to ask just a series of questions, just because what we're going to do right now is we're going to take a selfie, right? So we're going to hold our phones up and we're going to take a financial selfie, because in order to get to where we want to go, we have to know where we are right now, and we have to be honest, we have to be transparent, and we have to be real about the situation, because just one falsity in our actual circumstances could throw our whole plan off. So what I like to say is, what we're going to do now is where we are, what we have to do is we have to create a money map. And what that money map is going to do is it's going to take us from where we are to where we want to be. But if we aren't truthful about where we are, with any GPS, if you put the incorrect address in, you're going to go to the incorrect location. So we got to be honest. So what we're going to do is we're going to take a financial selfie. So the first question is, have you written down your short and long-term financial goals? You got to write down your goals. What I found out is when you write it down, it makes it more real. And then it keeps it in front of you. So now you can go back and say, oh, I accomplished this, or I didn't accomplish this, and this is what I need to do. The next thing is, do you know where your financial documents are? Do you have an up-to-date will and power of attorney? Do you have a contact list of financial professionals, such as an accountant, an attorney, your insurance agent, your financial advisor? When was the last time you looked at your credit report? Do you know what the balance, the interest rate, fees, and credit limits are on all of your credit cards? Do you have at least 3 to 6 months of income and a savings for an emergency, so you're just in case fund? Are you contributing to a retirement account? Do you even know what your income tax bracket is? Do you know how much life insurance you have? Do you know how much life insurance you need? And that would be on yourself and your family. And are the incomes of you and your family members insured? So those are some things, those are just a few questions that will get us in the habit or get us in the mode of taking this financial selfie, so that we can be honest and realistic with ourselves, so that we'll know this is where I am right now. So maybe you answered all of those questions and you know the answers to them, but what I found in my business and dealing with clients is most people are not aware of those things. So it's very important that take some time and go through your financial situation, so that you can and will be able to know where you are, so that you can start out on your journey to financial peace in order. So another thing that we find in this journey is that as women, we face unique challenges, right? Generally, we earn less than men in our careers. A lot of times we are relying on someone else for our financial security. We also oftentimes fail to set sustainable financial goals. We do not have that just in case fund of 3 to 6 months in income for our savings. And to top all of that off, we generally live longer than men. So we face unique challenges, and that's the reason why it is very important for us to make sure that we take control of our money, so that we are we know what we need to do, when we need to do it. And if we get into a situation, it will make it very easy for us to just shift from that situation to get where we need to be. So now, another thing that we find out is that a lot of women they feel financially frustrated. And they feel financially frustrated simply for the things that we just went over. And we don't have enough money and savings a lot of times for our retirement. If something was to happen again, we're going to have to depend on someone else. So in order for us not to feel financially frustrated, it is definitely time for us to take control of our money. We have to take control of our money. So now you say, well, Chantel, how do I do that? And I say to you, I'm glad you asked. So the way that you take control of your financial future, there's 4 things that you need to do. The first thing is you have to manage your money. You have to manage your money. You have to know what your cash flow and your debt is. The next thing is you have to protect yourself against risk. Then we have to make strategic investing and tax decisions. And then we have to save for our long-term goals. So let's go with the first step. The first step is money management. And managing our money, there's a couple things that we need to know. So the first thing that we need to know is we need to know our numbers. What are your numbers? And when we're talking about numbers, we're not talking about your telephone number. We're talking about, do you know your credit scores for all 3 credit reporting bureaus? And we're not talking about the score that Credit Karma shows us. We're talking about the actual FICO score that makes a difference when you're trying to purchase something, or that makes a difference when you're trying to obtain credit. The next thing is we got to have a budget. So you have to have a budget. The budget is what's going to keep us on track. The budget is what's going to help us make sure that we are not overspending, or it's going to give us a clue as to there's too much month at the end of this money. So now we need to make a shift in order to change that. The next number that you need to know is your cash flow. How much income do you have coming in versus the expenses that you have going out? And then you need to know your net worth. This one was a big one for me when I actually took the time to sit down and figure out what my net worth was. And the net worth, when we're talking about your net worth is simply, what are your assets? What are your liabilities? And whatever the difference of your total assets and your total liabilities are, that is your net worth. That probably, for me, was the biggest number that I really needed to know, because it made a difference. And in all transparency, when I first did and figured out what my net worth was, I was negative. My net worth was negative. So it really made me say, you want to know what, Chantel? It's time for you to buckle yourself down and figure out what do you need to do in order to make this a positive number. Because the reality is, I cannot leave a legacy to my children that's in the negative. So if I wanted to leave a financial legacy for my children, that I definitely needed to know what my net worth is so that I can work on that goal of obtaining that. So a lot of questions, sometimes I get questions in regards to when we're talking about creating a budget. And people want, like, what are the percentages that we're looking at? So when you're creating your budget, or when you are figuring out your expenses, the way that I tell my clients that these are the numbers or the percentages that you should be spending. Your housing expense should be no more than 35% of your income. So between 25 and 35% is what you should be spending on housing. If you are spending more than that on housing, then either you need to move or you need to make more money. But 25 to 35% of your budget should be allocated for housing. If you can go lower, by all means, that's better. Your food should be, and this is food that you purchase when you go to the grocery store, as well as when you're eating out, should not exceed 15% of your budget. So 10 to 15% of your budget should be allocated towards food. Your transportation, again, should be approximately 10 to 15% of your income. Transportation is if you have a car, that's going to include your car payment, your insurance, and possible repairs that you may have to do with repairs and maintenance and gas. So we want to make sure that a lot of times what happens is we find ourselves go and we make more money. And generally when we make more money, we go and get more expenses. And what we don't factor in is when we're, especially with transportation, you go and you get a car payment and your car payment is $600. Your insurance on that car is say $300. That's $900 already out of your budget. So unless you are making $9,000 a month, you should not be spending $900 a month on transportation. And remember, we haven't factored in repairs and maintenance or gas on that. So 10 to 15% for transportation. Your entertainment is because we do believe that it's very important that you factor in self-care, right? So your entertainment should be 5 to 10% of your budget. And I'm gonna say, let's make that 5% of your budget. 5% of your budget for entertainment. Your savings, so we're talking about your 401k, your emergency, that should be monthly. You should be saving between 10 to 15% of the income for that. And we would, and so the other thing is, now we have to factor in giving. We got to factor in giving because 10% of your income should go towards giving, which means in order for us, if we were to add that all up, we're at 105%. So now we have to figure out, because giving is that is a priority, because when you give, it makes it open for you to be able to receive. So then I would say, you want to know what, to one of my clients, if their budget was at 105%, then what we need to do is let's go back and reevaluate our food. Let's go back and reevaluate our housing. Let's go back and reevaluate our entertainment. So now remember, these are not numbers that you have to go by, but it's just better in order to make sure that you have a well-rounded budget that allows you to live within your means. So when you're creating your budget and when you're managing your money, one of the things is you have to make goals. So it's good when you are able to write those goals down. But when you're making your goals, you want to make sure that your goals are realistic and they're measurable. You also want to give yourself a deadline when you have a goal. So if you say that I want to save $1,000 because I need to get to the point where I have my just in case fund set for my 3 to 6 months, but that is a process. So I want to be able to save at least $1,000 in the next 3 months. Then you figure out, how are you going to do that? So if you're going to save $1,000 in the next 3 months, that means that you need to approximately save $300 and a little bit more than $300 every month for the next 3 months in order. So that's like $333 that you need to save every month for the next 3 months in order to get to that $1,000, make that $1,000 attainable. So now, is that realistic for you, right? So it's measurable because we just figured out $333 gives us $999, right? So then you need to throw the extra dollar in there. So it's measurable, but according to your budget, make sure that that number is realistic. Because what we don't want to do is we don't want to overextend ourselves and then get discouraged and not actually follow through on the things that we say that we have planned to do. The other thing is you want to make your goals, when you write goals, you want to make them bite-sized, right? So you want to make them attainable and attainable easily. So when you make a goal, and if I was to make a goal to say, I'm going to eat healthy today, and then I go and just have a salad or something, or baked fish for lunch or for dinner, that's something that I can say I accomplished it. And it does something, when we accomplish one of our goals, it does something to our psyche that makes us want to move forward to go on to those goals that may be a little bit harder to attain. It just gives us a different energy. So you want to make sure that you make your goals into bite-sized pieces so that it makes it easier. First of all, it makes it easier for you to attain, but then once you obtain that goal, it's like it gives you the next burst of energy you need in order to go to the next phase. And then once you accomplish your goals, reward yourself. Reward yourself. We all like it if we were to go somewhere and you go to an event and you win a prize. Like, it can be the simplest thing, but we get all excited about that. So you want to make sure that reward yourself. Every time you accomplish a goal, find some type of way to reward yourself. If you say you want to lose weight and you lose the amount of weight that you want to lose, what is something that you can do to say, you want to know what? I did what I said I was going to do. Now I'm going to reward myself because I feel like I deserve this. So now, what we recommend when we're talking about saving for like your just in case fund is it's better to just have it automatic. So if you know that you want to save that $300 and you're working on a job, have it automatically taken out of your account and placed into a bank that you don't actually have readily access to. So something that you can't you would have to go out of your way in order to get that money. So you want to take it and make automatic deductions, because if they take it, one of the things that we found out that you can't miss something that was never in your hand. But if you get the money and then you have to make that decision to put it in a different bank account, that might be a little bit more difficult choice. So do automatic payroll deductions, or if you are self-employed and you're an entrepreneur, have it set up to where automatically you're taking money from this account and having it transferred to a separate account. Again, the second thing you want to do when it comes to saving for your emergency fund or just in case fund is you want to make that account inaccessible. You want to be in order for you to go and get this money, you need to be inconvenient, because remember, it is a just in case fund. The reason I don't refer to it as an emergency fund is simply because everything is an emergency, right? Anything can be an emergency. Oh my God, I broke my nail. That's an emergency. So we want to make sure that we make it inconvenient. Don't have a debit card for that particular account. Because you don't want to be able to, and you don't want it attached to your regular everyday checking account, because you don't want to have ease of access to it. And then the other thing that you can do in order to move a little faster with your savings is if you get a raise and you've already been accustomed to living off $1,000 per month, and now you got a raise and now you're bringing home $1,100, take that extra $100 and save it. That will help you get to where you're trying to go much faster. If you get a promotion or if you get a bonus, take that extra money and save it in order so that you can get to where it is you're trying to go quicker. The next thing is you want to use secure investments. So when you're saving this, you want to put it in an account that is going to draw interest. So a money market account or a high yielding savings account is what we would recommend, is where we would recommend you put that money, because anytime you have money sitting around somewhere and it's not making money or it's not doing anything, it's really depreciating in value. So the next thing is step number 2 is you got to protect what matters the most. You have to protect what matters the most. So when we're talking about this, we're talking about protecting your loved ones. We're talking protecting your health, protecting your income. These are things that we need to protect. And what I call it is protecting the heart. And the way that you protect your heart is to make sure that you are covered, to make sure that for your loved ones, like in the event that something happens and maybe you get sick, and in order for you to get the best care, you're going to need health insurance. And there's a lot of options that are out there that does not have to be very costly. There are some short-term plans. There is the marketplace, healthcare, the healthcare.gov. If you are self-insured, then you just want to make sure that you have money set aside for that. So in the event that something happens, you want to make sure that you're covered. Because one of the things that we found that one of the major stressors when it comes to finances is outstanding medical bills. And we also found that a lot of people don't even go to the doctor because they don't have insurance coverage. So you want to protect what matters the most. And at this stage, what matters the most is you. Because one of the things that we believe is you need your health in order to create your wealth. So you want to make sure that you have health insurance. You want to cover your loved ones. The worst experience to ever have is to lose a loved one and not have coverage and have to worry about how are you going to bury your loved one, or how you're going to cremate your loved one, whatever that is. The worst experience in the world is to go through that season and not know. So you want to make sure that you protect your loved ones. Make sure that they have insurance coverage, life insurance. There's a life insurance that you can get that does not have, like, again, it does not have to cost a lot of money. Peace of mind does not have to be expensive, but in order to have peace of mind, we have to make sure that we are protecting ourselves and our family against unknown risks. The other thing is you got to protect your income. So if something happened to you today and you are unable to work, how are you going to provide for your family? How are you going to pay your bills? So you want to protect your income. That could be disability insurance. It could be that you've saved enough money in order to protect yourself against that. So there's even life insurance policies now that you can get that comes with that is actually life insurance that you can use in life, like while you are alive. So you want to make sure that you have those coverages so that you can make ensuring that you are protecting yourself and your family again against unknown risks. So now our third step is going to be strategic planning. I know a lot of us have heard that the fortune is in the follow-up, but when it comes to your money, the fortune is in the plan. One thing that I can assure you is that if you don't have a plan, you will never accomplish it. So you gotta have a plan. If you are going to travel somewhere, so if you have made a decision that you're going to go to, say, Atlanta, Georgia, right? You gotta have a plan. So your first thing is you gotta know how you're gonna get there. The second thing is, once you figure out how you're gonna get there, you have to know where you're gonna live when you get there. Where are you gonna stay at once you arrive? And then you're gonna have plans. So once I go there, why am I going there? What is the purpose of me going there? You have to have a plan. And we're calling it a strategic plan. So you have to have a strategic wealth building plan, which is your investing, and you have to have a strategic tax plan. You have to have a strategic wealth building plan, and you have to have a strategic tax plan. So your wealth building plan is simply going to be your investment strategy. Because what I can assure you of is if you could take $1,000 every month and you put it up under the mattress where it, again, is depreciating in value, maybe at the end of, not maybe, but at the end of 12 months, you save $1,000 every month, you're gonna have $12,000. But is that a good investment strategy when we know that that $12,000 at the end of that 12 months may at that point only be worth $10,000? So you need a good investment strategy. What is your investment strategy? Are you investing in the stock market? Somewhere where you can yield a good return? Are you investing in real estate? Again, somewhere where you can yield a good return. When we're talking about investment, we're talking about investing in a strategy or investing in a vehicle that is going to yield you a very good return on your investment. So at the end of the day, if you invest in a good strategy, you can say, for instance, we're going to use $1,000. So you're investing $1,000 you're investing $1,000 every single month, which is going to give you $12,000. If you put it up under the mattress, you're guaranteed at the end of that 12 months to have $12,000, right? However, if you put it in an investment vehicle that is yielding at minimum 6%, then at the end of that 12 months, you're going to, new amount that you're going to have is $12,720. So you want to make sure that you have an investment strategy, and not and I would say just putting money in a 401k and not knowing what is it, like you don't even know what stocks or mutual funds or EFTs, you don't know what is, like you don't even know the diversification of that. That's not a really good investment strategy. You want to make sure that you have an investment strategy. And when we're talking about the investment strategy, you want to also make sure that you understand the market risk. You want to make sure that you understand the inflation risk. You want to make sure that you understand the economic risk. You want to make sure that you understand the reinvestment risk, the currency risk, and the political risk. So all of these things, all of those risk factors will affect the growth of your investment. So it's not even a matter of your investment strategy can't be just put it there and leave it. If you are unable to sustain, or if you really don't understand what those risks even mean, then I'm going to say that you need to contact a financial professional, someone that can help you along that way of making sure that you have a strategic investment strategy that's going to take you from where you are right now to where you want to be. So now the next thing is my favorite subject, taxes. And when we're talking about taxes, the reality of the situation is there is nothing in life that is certain but death and taxes. That was told to us by Benjamin Franklin. Nothing in life is certain but death and taxes. You need to make sure that you have insurance, because if you were born, you shall surely die. And you need to make sure that you understand the tax code, because if you are working and you have an income coming in, then 9 times out of 10 that there's going to be some type of tax implications that you need to understand. So you need to understand whether your income is going to be non-taxable. So is it a non-taxable form of income? And you need to understand if it is a taxable form of income. When we're talking about taxes, you also need to understand what affects your tax bracket. Remember when we took our financial selfie, one of the questions that we asked is, do you know your income tax bracket? You need to understand what affects your income tax bracket. You need to understand what as a single taxpayer, what are the things that can affect me getting taxes? You need to understand, one of the things that we found is that most people don't even, most taxpayers don't even have the conceptual understanding of the filing status head of household. So if you are single and you are not claiming any dependents on your tax return, then you are not considered head of household when it comes to taxes. If you are single and you have a dependent that you're claiming on your tax return, as long as that dependent fits within a certain category, then you will be able to use the head of household filing status. So it's really important to understand what is your filing status? Will you file as single? Will you file as head of household? Will you file as married, filing separately? Will you file as married, filing jointly? Or could you be a qualifying widower? It's important, first step is important to understanding what is your filing status. Because your filing status, if you're not itemizing your deductions, your filing status is going to determine what your standard deduction is going to be. And one of the things, like I like to tell people, is not about how much money you make. It's not about how much money you make. How much money you make is not the factor on your wealth potential. How much money you keep is the factor of your wealth potential. So we want to make sure that we are putting together a tax plan that is going to allow us to pay what we should pay on taxes after we factored in every possible tax deduction and tax credit. We want to make sure, so it's important that either you go and you read the 70,000 pages of the tax code, or that you could connect with a tax professional that is going to have the capacity to say to you, based on your specific circumstances, based on your particular circumstances, then this is what is going to be the best tax strategy for you so that you can keep more of what you make. We pay taxes, right? And I'm a tax professional, but we pay enough taxes. You pay sales tax, you pay Social Security tax, you pay Medicare tax, you pay gas tax, you pay surplus taxes. There are so many taxes that we make. And the reality of the situation, or that we pay, the reality of the situation is the average American taxpayer pays 33% of their income in taxes. I'm going to say that again for the people in the back of the room. The average American taxpayer pays 33% of their income in taxes. So let's get a little perspective here. Let's just say, for instance, you made $100,000 in a year. And I use that because I like using round numbers. So let's say you $100,000 in a year is what you made. 33% of that $100,000 is $33,000 that you're paying in taxes. Imagine if every year, if you can save half of that and use it towards your benefit, use it towards building your wealth potential, use it towards leaving a legacy for your family, use it towards saving towards your retirement, use it towards your dream vacation. Just imagine that if you had an actual tax planning strategy that allowed you to only save half of that, where you are able to keep more of what you make. Imagine what your wealth potential could possibly be. So it is vitally important that we have a tax strategy. And again, it doesn't matter how much you make, because the amount of money that you make when we're talking about your wealth potential is not an actual factor. We want to make sure that you are keeping more of what you make. And our last point is saving. Saving, saving, saving. You got to save for your retirement. What better time than now? Start saving now. Even if it's $20 a month. Starting is where the victory is. You want to pay yourself first. If you are employed and you work for someone that has a retirement account and they match, you want to max out. So if they're matching at 6%, you want to be contributing 6% because you want to max out on whatever so that you can get the best bang for your buck. Again, automatic deposits. You want to do automated deposits because, again, if it's not in your hand, you can't miss it. And the last thing is talk to a financial professional. When it is easy for me to tell you all of the things that you need to do, but if you don't have a concept of what we're talking about, then it's landing on dead ears. You got to get with a financial professional that will be able to help you and assist you on your journey to becoming financially free. Again, I want to say thank you to 100 Successful Women in Business, the Global Trade Chamber, Maria, Al, all of you guys that joined us here today, whether it was on the webinar on Zoom, or whether it was on Facebook Live, or if you're watching the replay. Again, my name is Chantel Brown, and I am the CEO and founder of A-Class Tax Solutions, where taxes are made simple. If you are needing a financial professional, you can feel free to reach out to me. And our contact information, if you're on Zoom, is in the chat. And if you're on Facebook Live, we'll get that set over there. At this time, we'll open it up for questions.
I'm just shocked and amazed with this presentation. It was totally informative and very educating. I think we're gonna call you the queen of tax and wealth strategies. Not just a tax and strategies. I believe you are a queen because I learned a lot today and people didn't stop asking questions because all this is so important, Chantel. And actually, I've been receiving messages from our members. One of the questions they have is about the distribution of your income that you mentioned. If you can, summarize again the distribution of how you should distribute your income. You mentioned about housing, school, transportation,
Okay.
etc.
So when we're talking about the amount of our income that we should be spending on our budget, so the things that we should be budgeting for housing, no more than 25%. So 20 to 25% is the max we should be spending on housing. And this is of our monthly income. Food, no more than 10 to 15%. Transportation, no more than 10 to 15%. Entertainment, 5 to 10%. Savings is going to be 10 to 15%. And then always at least 10% of our income should be used for giving.
Amazing. Okay, so everybody that's watching this webinar today, make sure to take notes, write down the percentages because that is very important. Another important question, they actually were asking about the savings. You mentioned something about doing an automatic withdraw from your account. So the question is how this can be done.
So there's a lot of accounts now. So a lot of banks now are allowing you to automate your transfers. And some of them are also allowing you, so they allow you to automate your transfers from one account to another account inside the bank, but some of them are also allowing you to do the same thing from bank to bank. So they're making it easier for us to be able to make those transfers. If your bank does not allow you to do automated, then I would say if you are on payroll, if you are an employee, that you just automate it from your paycheck.
Perfect. One of the also viewers is asking about your contact information. Remember that the contact information is on the chat. If you are doing Zoom, please check the chat and you're gonna see Chantel's information, is her telephone number, the email, website, and also for everybody that is doing Facebook, we already post Chantel's information. However, if you wanna write it down now, you can reach her at 561-424-6600, right?
Correct.
So remember that if you have further questions, you can go ahead and contact her. Another question that I have regarding investments. What type of investment do you recommend?
So it really, when it comes to investment, it really depends on your risk tolerance. So that's a loaded question, really, because it's individually specific. Because what is a good strategy for you, Maria, may not be a good strategy for me. So that's a loaded question. I would say that would be one to, in order for me to be fair and make sure that I'm not, providing advice that's not going to be in the best interest of the individual, I would say to contact us directly so that we'll be able to give you a specific, because there's a lot of things that we would need to go through so that we can make sure that you are doing what's best for your situation, because investing and your strategy is not going to be broad. It's definitely going to be individually specific.
And like you said before, you need to know where you're going to invest and you need to understand the type of investment that you're going to make. So right. If people tells you you can invest in the stock market, but you don't really know how that works, so probably you're going to be losing money, right?
Correct. And what we don't want to do is lose money.
Absolutely. I mean, I also have my notes here, so I'm going to start saving the way you suggest. I never thought about the money that you really don't use to invest is just sleeping there and it's not producing any additional income for you. So sometimes you want to be protected. You want to feel that your money is safe because you are not using, you are not investing. But actually, like you said, you are not growing your money. So right. That is part of the investment, to take a little bit risk, right?
Correct. And one of the things is it's not even always about risk. Again, it's about understanding the strategy that you're using, because there are so many different strategies. So there's qualified strategies that when you invest in that, once you take your money out, you're going to be taxed on it. There's non-qualified strategies that you put the money in after taxes. So when you take it out, You don't have to worry about paying taxes on it. You don't have to worry about like what your new tax rate is going to be. And then there's also some investments that are risky, and there are some investments that's not risky. So that's the reason why it's difficult, you know, on this type of platform to say this is going to be the best investment strategy, because it really, again, depends on your
case by case.
Right.
Definitely. Yeah, I agree with that. And one of I was going to ask you two more questions. For the ones that are entrepreneurs, especially the sole proprietorships. So what would be the best advice for them in terms of paying themselves? Because when you work for somebody, it's easy just to receive the payroll, you receive your salary, and then they already automatically they deduct the percentages. But when you have your company and you don't have employees, so how you pay yourself?
So that is, Maria, that is actually a very good question. So the first thing is and whatever it is, you got to pay yourself first, right? And what you can do, so either if you are a sole proprietor, then you're going to pay yourself in what we call distribution. But you want to have two separate bank accounts. You want to have a bank account that is business specific, and you want to have a bank account that is your individual, and this is how you pay your everyday living situation. So what you want to do is, if you are a self-employed person, you want from your business bank account to write yourself a check for whatever that distribution looks like, put it into your personal account, and then that would be how you pay your bills. I mean, you know, that would be how you pay yourself. The other suggestion would be to put yourself on payroll. And so what we do in that situation with our clients is we evaluate their business and see, you know what, based on your performance in your business, I recommend that maybe we even change your business entity structure, that we change the way that your business is structured. We place you on payroll where you are as an employee of the business, you're withholding your taxes, you're paying the taxes to the respective states and to the federal government, and now you become a W-2 employee for that business. So again, but the first and foremost, if you're not at that point to put yourself on actual payroll, you need to take a distribution from the business and put it into your personal account, and that would be how you would pay yourself as a sole proprietor.
And what is the average percentage for the distribution for yourself?
I would say it really depends on your business. So, and then it depends on what are your expenses, because remember, we talked about we need to know what our income is, we need to know what our expenses is. If you have a business, in essence, you're two individuals. So you are your business and then you are your person. So you need to know what the expenses are for you at home. You need to know what the expenses are in your business, and then you need to plan accordingly. So if at home your budget dictates that you need $3,000 a month, then that's what your distribution is, because it's really you taking the money out of your business so that you can live off of, you know, to be able to live off of the fruits of your loins. So so your distribution is really going to be dependent upon what are the needs at home? Like, what are you trying, or is there something that you're trying to accomplish? Or if there's a certain amount of bills that you need to pay every month, what do you need to live off of, what equate to what your distributions are?
Absolutely. And well, we have a lot of questions. I'm very impressed with all the questions that we have from our audience today. Unfortunately, due to the time, we cannot go through all the questions, but please feel free to email Chantel. She has all the contact information on the chat. Also, we post the information on our Facebook channels. However, I'm going to tell you one more time, the telephone number in case you want to contact her is 561-424-6600. You can also visit the website, classtaxsolutions.net, and she's going to be available. You can also reach out the chamber, call us. We're going to, with pleasure, share the information with you. And for further questions, please make sure to contact Chantel, and she's going to definitely help you in all the strategies that you need to invest and to grow your business. I'm very happy to have you today. Thank you so much for making the time to share all this information and education for us, because we really learned a lot today. And if you would like to say something else before we finish the presentation.
So I would just like to, in closing, say that if there's questions, anyone that has questions, if they go on the Facebook under the, because I believe that the live is going to be left on there, So if there's any questions, they can go on there, ask the questions, and my team and I'll be able to answer those questions even once the live is over, because it's still up. You'll still be able to chat on there. So we'll definitely be available, keep ourselves available to be able to answer any questions that anyone may have.
Perfect. Thank you so much, Chantel. And we're gonna finish the presentation now in Facebook. And I believe that we have Tatiana that she wants to ask you a question. We can do it that internally through Zoom. But thanks again, everybody, for watching this webinar today. Make sure to follow us in Facebook and Instagram. We also have LinkedIn, and visit our website, www.global3chamber.com. Thank you so much, and see you next time.
Thank you. Stay safe and spend wisely.